Hey everyone, welcome back to another exclusive podcast from IronFX, where we're dedicated to bringing you the absolute best education to help you take your trading to the next level. In today's podcast, we'll be talking about a Santa Claus rally. Before we begin, what exactly is a Santa Claus rally? I believe many of you or some of you may be asking this question. Well, it refers to a strong rise in equity markets that usually begins in December, sometimes starting as late as the third week of this month. With the recent FOMC meeting that took place on the 13th of December, where the Federal Reserve communicated a pretty dovish stance and outlook on monetary policy, it appears that Santa has arrived earlier than anticipated for the stock market. Prior to that, we already saw the major US indices rebound in the beginning of November. Now, why did that happen? Well, it was mostly due to US inflation easing steadily in the second half of this year, with both headline and core CPI readings falling closer to the Fed's target of 2%. Although the Fed has yet to cut rates, but the effect of slower inflation can be seen in the level of US Treasury yields as well as the value of the US dollar. Both of these asset classes are off their respective peaks and have drifted lower quite considerably as inflation slowed. So even though the Fed has yet to cut rates, markets are already pricing in lower interest rates in a sense. What is important to note is that a combination of high treasury yields and an elevated US dollar create tighter than usual financial conditions. Now, this in general is negative for equity markets. This is an environment that we've witnessed for most parts of 2022 as well as 2023. Conversely, when treasury yields and the US dollar fall, it creates looser financial conditions, which in turn provides a positive catalyst for equity markets. This was clearly observed in the third quarter of 2022, as well as in the first half of 2023, where the major US indices rallied strongly. And now, spurred on by a dovish Fed, financial conditions have become looser once again to spur this current stock market rally. It appears that this Santa Claus rally is all but guaranteed, bringing a massive cheer to everyone. But the important question to ask is, can this rally be sustained as 2024 gets underway? Well, perhaps it can. Should inflation continue to drift lower and US corporations continue to post strong revenues and earnings, we could see this rally being sustained and perhaps even continue to make new highs. As long as inflation doesn't rear its ugly head once more and the US labor market remains robust, we could see equity markets remaining elevated in the first quarter of 2024. Anyways, that's all from me for today's podcast on the Santa Claus rally. Do remember to subscribe to our podcast here at IronFX, where we are dedicated to bringing you the very best education to take your trading to the next level. Until then, stay safe and trade safe.